We're catching up with Kim Anderson, our grain marketing specialist, this week at Grain Grading School, and everybody, of course, gearing up for harvest.
And what we're doing is we're training elevator grain handlers how to grade grain, because the only way to buy and sell grain is to grade it accurately. If it's not graded accurately, then you're either going to pay too much or not enough for the product. Also, to have an efficient market system, you got to know what product, what grades, what quality you have in the bin, so that you can explain that to the buyer to get a fair price on the other end. So what we're doing is the grain grading schools to keep the market, the price fair and the market efficient.
Okay, and speaking of markets, let's kind of cover what the latest market news is this week.
Well, wheat prices, they were down 15 cents on Thursday, down at the end of the week. I think that's because of the moisture and the rain going through in the hard red winter wheat area. I think the market believes that our yields have improved, that at least we're getting what USDA predicted, and as yields go up, as expected production goes up, our price goes down, and I think that's what's going on right now in wheat.
Okay, and how is corn playing into prices, and what's the dynamic there?
Well, the market had been watching the corn planting. Of course, it was delayed. I think a good many acres got planted this last week. Some estimates have for Monday 60 million acres of corn out of the 97 million predicted. I don't think that had any impact on wheat prices, maybe a little bit with it getting in the ground. The nearby corn prices held relatively steady. Deferred corn prices were down a little bit.
Okay. With all that in mind, your advice for those wanting to market that 2013 crop?
Well, the forward contract price in Oklahoma for wheat's $7, $7.20. If that's important to you, then I think you should, and you can't sleep at night, I think you should take some of that. But analysts say don't forward contract more than 20%. I personally believe that if prices go down, that means my production's going to be higher, and that's going to offset it. But if prices go up, that means my production's probably lower, and I'm going to wish I had a forward contract. So price and production is going to offset themselves to a certain degree, and so I probably wouldn't price any, but if I couldn't sleep at night, I'd get me some forward contracts.
Okay, Kim Anderson, thanks a lot. Good catching up with you here in Garfield County.